In terms of an agenda today, we want to start from a high level and speak a little bit initially about the global outlook. The reason for this is because there are so many dynamics at the global level that are important for executives in Asia Pacific to understand. The global environment is having an extraordinary impact right now, an outsized impact right now on the Asia Pacific region, as well as key economies within it. And so understanding those dynamics will be critical for setting the foundations for the rest of the conversation. Also be critical to understand for Asia Pacific executives who are in constant conversation with their colleagues in corporate, making the case and trying to explain some of the divergence that we're seeing globally. Once we've done that, we're going to turn our attention to the outlook for the cost and pricing environment, globally and within Asia Pacific, and utilize that conversation to discuss a range of factors, not just focused on cost, but also focused on interest rates as well as exchange rates. And finally, we'll wrap up with a conversation specifically on China, which Thomas will be actively contributing to, because we do believe that there are some important dynamics at play in the market that APAC executives need to understand, regardless of whether they have China in their portfolio. As we go through that agenda, there are several items that will hopefully jump out at you, and I want to highlight those right now so you can look for them. First of all, we're going to see growth dynamics across the world diverge over the course of this year. Asia Pacific will continue to outperform, but the shape of growth will look a little bit different, particularly in China. And so it's critically important that executives invest time communicating upwards, particularly about how APAC's growth dynamics differ from other regions, North America and Europe specifically. If you've got China in your portfolio, actively communicate regarding the shape of China's recovery, because it looks very different and the headline numbers can be very misleading. Secondly, expect input costs and interest rate pressures to remain elevated this year. It's going to be really important to segment your customers and markets and actively shift sales and marketing this year towards those that are likely to be less sensitive. But be very careful about making changes that are going to impact your long-term position in the marketplace, particularly in terms of things like your product portfolio, because current pressures should begin to ease next year. Next year, in fact, interest rates should begin to fall in major Western markets and to varying degrees across major APAC markets. So you're likely to see a moderate uptick in demand next year from interest rate sensitive segments, particularly outside of Japan and Greater China, particularly in H2. Furthermore, you're likely to see most APAC currencies appreciate moderately relative to the US dollar. And relative to the euro, you're likely to see similar dynamics in developed APAC. Let me fill in the blanks between all of those key takeaways and give you a foundation for actually understanding why we have come to those conclusions. And we'll begin with the global outlook. I want to start with a set of assumptions. We all know that it's an extraordinarily uncertain time in the global economy. And as a result, the assumptions that underpin our views and our forecasts take on outsized importance. Why? Because at the end of the day, the strength of forecasts, the strength of strategic plans, all depend on the strength of the assumptions that underpin them. Bad assumptions lead to bad plans and bad forecasts. Good assumptions lead to, well, better plans and better forecasts. And so we want to be really upfront about what assumptions underpin our views. Let's start from the top left. We do believe that while global inflation likely has peaked, the rate of price increases will remain very high this year. Turning to China, we believe the government has permanently abandoned its zero COVID policy and will now prioritize growth-oriented policies, but not at the expense of national security considerations, or what the administration is increasing, or the increasing scope of topics that the current administration views as national security considerations, excuse me. We do believe the Russia-Ukraine war will enter a stalemate and continue for an extended period. That means the pressures that we've seen in Europe will remain in place. Global energy and commodity prices are going to remain historically elevated and will likely experience substantial volatility, though they probably won't rise to levels we saw last year. In the US, the Federal Reserve will hold interest rates above 5% through the rest of this year before beginning to ease next year. We'll get into that in more detail. And finally, an important caveat, there's so many potential disruptions out there that they could substantially alter the outlook. It's really important that companies build flexibility into their plans for the rest of this year and into next year because of that uncertainty. All right, if we take all of these assumptions and we pull them together and we look at the global economy, what do we see? We see increasingly divergent growth trajectories across major markets. Take a look at the table on this slide, you get a sense of what we mean. We basically color-coded the growth trajectories that we expect to see in the US, Western Europe, and China. You'll see that the colors really don't match up. We expect Western Europe to have a relatively rough first half of the year, the US to have a more challenging second half of the year, and during pretty much that entire time, with the exception of the messy reopening in Q1 for China, we expect to see pretty reasonable performance out of the economy, albeit very uneven and unlike recoveries we've seen in the past. This divergence in growth is creating real challenges in terms of internal communication. Imagine being an executive with an APAC portfolio or one sitting in China and trying to communicate with executives in corporate sitting in Germany about what's going on in China. It's very difficult to for many executives who are living a very difficult situation on a day-to-day basis to not allow that experience to color their view of what's going on in the world. We've seen this happen in the past, not just in Europe, but elsewhere. And we're going to see it happen again this year. Indeed, in conversations we have with executives, we're confident that it's happening already. And just to be clear, this isn't a Western Europe issue either. We see the same thing happening in conversations with executives sitting in North America as well. So it's really important that executives understand what's going on in key global markets so they can manage those conversations. With that in mind, let me give you a little bit more detail on what we see happening in a couple of these markets outside of Asia Pacific. And we'll start in the United States. We do believe the US will likely experience a short and shallow recession starting later this year. Frankly speaking, this is a view that it's not uncommon, but it's been shifting, not just within our view, but across a wide range of forecasting houses. Why? Because the US economy has held up remarkably well under the pressure of the aggressive interest rate increases we've seen out of the US Federal Reserve. It's been pretty impressive, to be quite frank, to see just how resilient American households and businesses have been under that pressure. Having said that, it's very clear that the aggressive interest rate increases from the US Federal Reserve are beginning to bite, and we're beginning to see that show up in the data. And so we do believe that there will be a challenging period coming later this year. Right now, our view is probably Q3, Q4. It could push to Q4, Q1. The bottom line here is we're going to see challenges emerge in North America over the course of the rest of this year. So it's important to understand that and prepare for it.
Hi, my name is Krista Reganey, and I'm the Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.